What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 17th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about a big picture topic when it comes to cryptocurrencies, and that is the argument that we have yet to see our greatest rally for cryptocurrencies. Now, what I mean by this is not so much in the sense of multiples or percentage gain. It's obviously going to be probably more profitable if you would have invested in Bitcoin back in 2011 or 2012, bought it around $1 and sold it at $1,000, or if you bought it in 2015 and 2016 around $200 and sold it at $20,000. That's a 100x multiple. It's hard to beat that. Now, my argument is going to be that we not only are going to see parabolic gains in cryptocurrencies again, but along with that, that we are going to see Bitcoin and assets like it, other cryptocurrencies, go to a valuation we have yet to see that takes it from a multi-billion-dollar market to a multi-trillion-dollar market. I know it's a very big claim, and I want to spend some time to talk about why I believe we have yet to see our dot-com bubble for cryptocurrencies. And if you don't know what that means, stay tuned. I'll explain it. It's not complex, guys, but it's a very interesting topic. Now, two things I want to note real quick. That there's going to be a sponsored interview towards the end of the video for Ledin, which is a cryptocurrency lending platform. I recommend you guys stay tuned for that. And outside of that as well, there's also a TaxBit giveaway. For those of you who want to simplify your taxes, there's a chance for you to win a free subscription package to TaxBit to simplify your taxes at the end of the year. Just check out the form down below in the description. No need to sign up. Just fill out the form and you'll be able to enter in for a chance. All right? So let's go ahead and take a look across the board on the market, guys. Markets are absolutely positive across the board. We see the vast majority of cryptocurrencies are up right now, with a few exceptions at the bottom. The vast majority here are in the green, some of them pushing double-digit territory. And again, we're starting to see this in some of the well-known names in the market. We tend to find that it's usually the kind of upper range mid-caps and large caps that start to pick up once we start to see risk-taking in altcoins. Ethereum Classic being one of them. We got Tezos as well, Cosmos, Lisk, Chainlink, Ravencoin, Icon, a lot of different places across the board doing well, right? So this is a very important sign to see here that we're starting to take some risk taking, and I'll talk about that as we take a look at Bitcoin dominance in a bit. But I want to go ahead here and just go ahead and talk about kind of the general thesis here, right? So my idea here is that Bitcoin has yet to go, as well as other cryptocurrencies, have yet to go through really their largest cycle yet, to really take this asset class from a kind of niche community where it is right now into the broad institutional and world of retail, in this case, retail meaning everyday people, right? So how can we expect that in the next 2 to 3 years we're going to see this happen? Why do I feel confidence that this is likely to happen? Well, first off, we're giving ourselves 2 to 3 years, which is good. But it's important to understand that there are a lot of misconceptions when it comes to looking at Bitcoin and observing it. A lot of people look at Bitcoin's price and they constantly think, I mean, even they thought this back here when it was a few $100. They thought, oh my God, Bitcoin is at X price, it's at $8,700, it's at $5,000, it's at $20,000. There's no way it could go higher from where it is now. And that's a very big misconception because you should never be focusing on price. Now, if price is going up, that's good. It means that your investment's going up. But the problem is that you have to look at something known as market capitalization, which many of you are probably aware of by now. But for those of you who may not know, market capitalization is the actual valuation of an asset class. It takes the existing supply of an asset. So if you were looking at a stock, maybe like Apple, it would be the total number of shares times the market price. And in the case of Bitcoin, it's no different. It's just that in this case, we're talking about the total supply of Bitcoins in circulation. And in this case, we have to take the market price of 8,700 and multiply that by the existing circulating supply. What's nice is we don't actually have to do that math. It's already done for us on CoinMarketCap. And this is the value right here. We can see if we dive into the Bitcoin page here, that we'll see that we have an existing circulating supply of around 18.1 million Bitcoin multiplied by the market price, and you get your valuation there. So we're at around $160 billion for Bitcoin. Might sound like a lot to some people. Some people would say, still, Nick, like to me, that sounds very expensive. Why would I want to buy an asset that's already valued at $160 billion? That's, basically the net worth of someone like Jeff Bezos, right? It's a very fair point. But the thing is, people don't understand, I think, in many ways, the scales of markets. And I want to go ahead and talk about in this video. And that's why I make a comparison to what's known as the dot-com bubble. Okay, so we've already seen here that Bitcoin has been the best performing asset of this year. It's far outpaced equities, which are having one of their, really back in 2019 and still at the beginning of this year, have had one of their best years yet. And at the same time, they're still outpacing commodities like gold and silver, bonds, and this is why I put so much focus on crypto. But I want to go ahead and compare it here very much to what we're entering into. It's very similar to how the NASDAQ performed back in the 90s leading up to the run-up of the internet. And that's what's known as the dot-com bubble. So to put it simple, the dot-com bubble was a speculative period for about a decade from the early 90s to just up to about 2000, where we saw tech stocks have parabolic run-ups with a lack of, much serious understanding of the tech, not a full sense of clarity as to how that tech was going to scale in the world. And I think we still got a long way to go before crypto goes absolutely mainstream, but this is where we're going to see it come into fruition here. We're going to start to see much more mainstream adoption of this technology, and then as we saw here, over time, over the next decade, much more actual fundamentals coming back in and reasoning for these companies, in this case, to get back to the values that they were. Same in this case with cryptocurrencies, okay? So again, the dot-com bubble is this very interesting speculative period. You had, for example, comments early on from 1996 from Alan Greenspan, who was the Fed chairman, talking about how this was, we're stepping into one of my favorite terms, irrational exuberance. And this was way before it really got crazy. You could start to see some of these companies like AOL agreeing to pay $156 billion in stock for Time Warner. I mean, there's just crazy things going on here. Amazon going public at $18 a share, right? Nowadays, that would actually be seen as pretty cheap, but this was at a time where none of these companies were making money, right? And the fascinating thing to take into mind is how big of a bubble this was, how much valuations ran up, right? So on this chart here, focus on the colored graph here and the valuations here on the side. So for each of these intervals, this is in millions in this case. Excuse me, sorry, billions. Right? So we're talking about $12 trillion. If we take a look at this figure, 16 trillion, 20 trillion. From that cycle, we had a valuation of around 17 to 18 trillion dollars at the peak of the dot-com bubble. 17 to 18 trillion, not billion, trillion. Now, this is very important and significant to take into mind because we're talking about equities here. And the important thing to note about equities is that equities are dwarfed by currency markets. And that's what cryptocurrencies are. They're an emerging currency and speculative asset class. So you get all the great speculation of assets, like you did with tech stocks. But along with that as well, you also get the absolute size and scale of currency markets and storing value. So it's kind of a hybrid between three markets, I'd say. You're getting the store value aspect that we see in gold and silver, which is about a $7 to $8 trillion market here and now today. You get the speculative room that we got in the dot-com bubble and what we could see generally in equities, and you also get the fundamental ability to be seen as a currency in this case. It's a win-win in every case for Bitcoin and how it's perceived by the world and how it's serving as this kind of native asset for world commerce, for world store of value, for a little bit of speculation and hedge against the fear in the world, with everything being overinflated in value and a lot of fear coming into the picture, right? So there's all these benefits for Bitcoin. But to take it into that market of scale here, we're sitting at $160 billion. We just talked as a comparison to the peak of the dot-com bubble, around 17 to 18 trillion dollars. You think we got a ways to go? I think we do. Because if we were to reach those valuations, that would mean that Bitcoin is going to go through a 100x in valuations. It's very simple math here. Even more than 100x valuation, because if we multiply $160 billion by 100, that's going to put us at 16 trillion. Right? Now, I'm not saying it's going to go up to the valuations of the dot-com bubble in this cycle. I've already told you guys, my expectation is that we're going to $100,000 in this cycle, which will mean that we're likely going to go somewhere around $2 trillion, give or take. And that's not that crazy to ask for. To think that an emerging store of value, an emerging speculative play on the global scale, and something that could be perceived as a hedge for a lot of people in currency markets and all kinds of different nations where that's needed, that could be a very reasonable valuation. It's going to be very expensive to buy one whole Bitcoin at $100,000. The nice thing is you don't have to buy a whole Bitcoin. You can buy fractions of a Bitcoin. This is just a measurement of one entire Bitcoin, right? So you can buy Satoshis, you can buy fractions of a Bitcoin. But if you can get past that deception of price, the ability for Bitcoin to get to something like 100,000 after understanding valuation and scale of markets is not too difficult. Now, again, a lot of people would probably jump to another question in this case, and it's something that people have been speculative of over the last few months because Bitcoin was in a little bit of a correction here. We had about a 45 to 50% correction since our run up from 3,000 to 14,000. And that was, it's the simple question of, Nick, is it time for crypto markets? Should I get bullish on it? And I can't tell you guys what to do, but I'll go ahead and take a look at all the major data science models here. In the last cycle, back here in 2015, we dipped below slightly on the 2-year MA multiplier, and we came back up afterwards, pushing sideways and then peaking into the cycle. We did the exact same thing over here. We're repeating history. We stayed down here for a couple of months, came back up, and we've come back up with a raging run up here, right? The market's been very positive here. Along with that as well, stock to flow models. We go into the halving event where Bitcoin supply is going to, the newly issued Bitcoin that enter into the supply is going to be cut basically every 4 years. In this case, we're getting very close to it, showing very similar historic similarities as we start to enter into the curve here for the stock to flow model. If we take a look back at where we are now, we can see very similar picture here. We're just about to enter into that very volatile period. Along with that as well, for the third model, days of profitability. This is what I always try to show, guys. It's the most simple data science model. It shows you the number of days you'd either be neutral or up on your money on Bitcoin. 92.7% of its history. And this is still being very far away from 20,000. It shows you that if you get eager about Bitcoin in these periods where no one's talking about it, it's very likely that if you wait patiently, history shows you can turn a profit, right? History's shown it so far. Again, there's no guarantee of future profits, but we'll see if it happens again. I like to bet on history, and I like to see these kind of parabolic run-ups. There's not many asset classes that do this. The mathematics make it so Bitcoin can do this. And not to mention, it's a new emerging asset, so there's a lot of room to grow, as we talked about. And the important thing I want to talk about as well, in the sense of, multiples or returns, is we're just talking about Bitcoin here. What about altcoins? I think that's a very fair question, as I'm very well positioned in a lot of different cryptocurrencies outside of Bitcoin. Well, an interesting thing that a lot of people don't know about is that it tends to be that when Bitcoin has had a halving event, the only really time period we really have data on this was the last halving event. If we take a look at Bitcoin dominance during that period, many might even see it as the catalyst that led altcoins to starting to lead in the market. And I'll go ahead here. Actually, I'll take it here to the weekly time frame just to keep it simple. Turn off our indicators. We can see here, if we take a look at Bitcoin dominance, the first major steady 1 week drop in Bitcoin dominance happened on the week of the last halving event, where we cut the new issuance of Bitcoin in half. And then afterwards, shortly after a couple of months, about half a year, we saw two major altcoin cycles from here to here, taking Bitcoin dominance all the way from 98% to 36%. So if you're willing to, do some research, find good projects, and see where other value is being built in the crypto space and where the fundamentals might be shining, but the market may not be realizing those fundamental values, then you can possibly make even more returns on top of Bitcoin, right? This is going to be a multi-trillion-dollar asset class, and I can tell you if Bitcoin's going to $2 trillion, you're likely going to see a lot of value prop into altcoin markets as well. So that's the thing to keep in mind here. We've talked about some of those plays. I've done my top 10 altcoin plays for 2020. I've also got some other interesting plays outside of that as well. Recently, as I told you guys, I've built positions in things like Kyber Network. I've been having my solid positions in Chainlink and Basic Attention Token, and also as well in big plays like Ethereum. There's all kinds of different plays going across the board here for the market. But I digress here, right? We're seeing similar signs here. If we take a look at the indicators here on the weekly, we can see that it looks like it might be that we're turning on the monthly. It becomes even more clear that Bitcoin dominance is declining. And this does not mean that I'm bearish on Bitcoin. Bitcoin can still go up, but it means that risk-taking is coming on. People are now starting to position themselves because they see the momentum coming in. Many people know that the halving is coming up that are active in crypto markets right now. So because of that, it's a very interesting time, right? And the question here is, can we get anything close to what the NASDAQ composite has done back here during 2000? I think we can. I think we can get even just a fraction of this in the next cycle. If we got to $5 to $6 trillion as an overall market cap for cryptocurrencies, it really wouldn't take that much volume. It wouldn't take that much buyers. And along with that, it's something that's reasonable, right? We're not shooting to the stars beyond the dot-com bubble. We're shooting to something that we know is likely plausible for cryptocurrencies. It's something that wouldn't be too far out now that we understand where we are right now in the sense of valuations and the sense of worldwide adoption of cryptocurrencies at less than 1% adoption. So we've got a lot of room to grow. And we've seen how other markets have reacted in the past. It's just a matter of getting sizable liquidity and a larger group of individuals getting interested in this new emerging asset class. It just takes time. And a lot of people don't have that patience. But over the last few years, I've been able to learn how to grow on that patience. I've been able to utilize it to become profitable in investing. And I believe you guys can too. Whether or not you're bullish on cryptocurrency markets or not, it doesn't really matter. I will say above anything, it's to understand markets of scale and have patience for those markets of scale to come into fruition. All right. So I've rambled on enough today, guys. I hope you all have enjoyed this video. If you liked it, drop a like. It's always appreciated. And leave a comment down below if you agree or disagree. I'd like to hear from you guys. Talking about this concept of markets of scale, I think is a very fascinating topic. And another thing to note as well that I think some of you might point out is that we've lost about 3 to 4 million Bitcoins, so the supply is even shorter. So we may have more price room to grow up in this case for Bitcoin, right? And there's a lot of interesting things you could toss into the ring and just kind of, put together in a thesis, but I'm very excited to see where this market goes. And I'm going to be with you guys all the way through it, through 2020 and 2021. That all being said, let's go ahead and dive into our interview with Ledden. Alrighty, everyone. So in today's sponsored interview, we are sitting down with Mauricio, who is the co-founder and CSO of Ledden, an emerging platform that allows you to earn interest on your cryptocurrency or take out crypto-backed loans. Mauricio, we've had a great conversation beforehand, and I'm excited to continue it off here and talk a little bit more about what you're doing. So thanks for making the time, man. I appreciate it.
No, thanks, Nick, for having us on. It's always a pleasure.
Hey, man, it's an absolute pleasure on mine as well. So I've been very fascinated not only in just generally the DeFi space, but specifically in the kind of lending pools of the cryptocurrency space. And you guys, I think, would definitely meet under that category. You're offering the ability to not only earn interest on your cryptocurrencies like Bitcoin, but along with that, be able to use your Bitcoin to either gain more exposure to Bitcoin or be able to take out cash loans. So you want to spend some time just to talk a little bit about what that means and what kind of opportunity that could bring for other individuals in the space?
Yeah, definitely. So for us, essentially what Ledden is and what we built essentially when we built Ledden is a platform that gives you tools and services to either hold your Bitcoin for as long as you want and can, or earn or hold as much Bitcoin as you can. So essentially we have 3 products today. We have our first product, which was our Bitcoin backed loan, which is a product that gets you dollars if you hold Bitcoin and you don't want to sell it and need cash. So under that product, you put it under custody with us. You get real-time proof of reserves and assured custody with BitGo, and we give you the dollars you need to meet the expenses. You can repay them at any time and get your Bitcoin back. No penalties or such for any kind of repayments early. We want to keep it as flexible as we could when we did it. The second product essentially was our Bitcoin savings account, which allows people to deposit their Bitcoins and earn an interest while they wait. Essentially, that's the second product that we launched. And then the third product that we launched, which is B2X, is a way for essentially for people to double the amount of Bitcoin they have. And the reason we created the product is we were seeing that a lot of people were basically taking our Bitcoin backed loans, buying more Bitcoin with it, bringing the Bitcoin to the platform, getting another loan to buy more Bitcoin. And essentially what B2X does is that it short circuits that entire process and it gets you the maximum amount of Bitcoin that you can based on our thresholds, which today it means that we can double your Bitcoin. So if you deposit 1 Bitcoin, we'll give you a $1 loan to purchase the second one. We'll lock the 2 up in custody. You'll have 2 Bitcoins in the loan for one of them.
That's awesome, Mauricio. So to kind of build on that topic, as you were kind of alluding to, a lot of people have used so far a lot of these lending pools on the borrowing side in order to gain more exposure to the underlying asset in this case, or to gain more exposure to other crypto assets. And as you mentioned, originally in most cases, if I was to use like a lending pool like Compound or something like that, I'd go put up my crypto assets, get some form of stable coin, and then I would go out and buy more crypto. But you guys have been able to offer this service where you can basically double your exposure. And I think a lot of people, when they see that, they're kind of like, well, wait, how does that exactly work? Why would they be doubling my Bitcoin? So it's not that you're so much giving them a Bitcoin, but you're lending it to them in the short term, and they have to pay a certain rate of interest on this, correct?
Yeah, so we're lending them cash to buy more Bitcoin. And so what that does is that magnifies the Bitcoin returns in your portfolio relative to cash. So if you have a Bitcoin and you essentially use B2X to get 2 of them, every time Bitcoin moves up or down, it's going to essentially become 2 times for your portfolio. So what that means is that if Bitcoin goes up 50%, then you've made 100%, you've made one whole new Bitcoin. But if Bitcoin drops 50%, then that means you could potentially lose that entire original Bitcoin. Yeah. So essentially it magnifies your returns, and it's almost like multiplying the exposure that you're going to feel when Bitcoin moves.
That's the important thing. I always try to stress to people, especially during these times where markets have been actually relatively silent. We've had a pretty stark correction as of recent. And what I always assess to people is that, of course, again, people have to make their own decisions. But for me, I don't mind using margin as a very smart tool when I'm trading and investing, especially when prices have come down to these kind of corrective levels. So if it's a way where basically people can gain extra exposure to the upward movements in Bitcoin as the market might continue to go up. And then along with that, as well as you mentioned, this isn't just for margin positioning. This is also for people in projects in the crypto space who might need short-term cash. I know a lot of people have done that over the past few months. With the Ethereum they had, they basically were able to use it as collateral and get more cash.
Yeah, so when we launched our first product, which was our Bitcoin-backed loan, our first client was actually Francis Pulio, who's a very prominent Bitcoiner in the Canadian community. Since then, we've had actually a tremendous number of businesses and industry professionals that come to us for liquidity. So right now, we work with some of the top companies in Canada and in the world, really, in the Bitcoin space. Not so much the companies directly taking loans from us, that happens. But what we see often is the employees of those companies that get paid in Bitcoin actually come to us for cash flow, which has been pretty great because we've created some really strong relationships with some of the some of our peers. A lot of times we provide financing to some of our peers, especially in Canada, which helps makes us feel great because we're helping them grow the ecosystem as well. And really, the genesis of Ledin kind of came to be when I got into mining in 2014 when I was in Venezuela, and I noticed that people were falling in love with Bitcoin and frantically looking to get more or grow their mining operation, but the only way they could do that was by selling their Bitcoin, which proved time and time again to have been the worst decision. They should have just held on to the Bitcoin, but you want to keep growing the ecosystem, you want to keep growing your company. And there was no way that you could essentially have your cake and eat it too. That's in one way to say it. So when my business partner and I, Adam, were basically in Canada, this was early in 2017, looking for financing to essentially grow our mines, and we went time after time to financial institutions where they were telling us, no, sorry, we can't do that. Bitcoin's not an asset. We're sorry that we can't take security, that we don't consider that wealth. And the few companies that did, had done ICOs or were located in like Malta or Seychelles, and it was very hard to kind of get some, feel comfortable giving custody of your keys to these kinds of setups. So what we said was, we looked at it, we gave a hard look at the space, and we said that, we come from financial services background. So as we looked at the evolution of this and how this would scale, we said the only way that you're going to remain competitive by being able to borrow funds from institutions that have longer investment horizons and lower cost of capital, so that you can actually provide low capital to the Bitcoin community, is by staying on side of the regulation that these institutions have to play ball by, because you have to be on their side of the court to essentially have a relationship, be able to access that cash, and then lend it to the Bitcoin community. So we set up a very above board, fully transparent, like we like to think of Ledin as a glass box. We're one of the few companies in the world that gives you real-time proof of reserves. We're actually the only company in the world that gives you real-time proof of reserves and insured custody. So we go above and beyond to make people feel comfortable, and I believe that's why we've gotten the support of a lot of the people in the industry.
Yeah, I was going to say, Mauricio, I think that's the thing that stood out to me when I was taking my first look at Ledin, was not only the ability, obviously, to be able to get these good rates, I think, both on the borrowing and then on the lending side for your crypto. But along with that as well, I think the kind of standards that you guys have set have really kind of upped the game for a lot of the lending platforms, being based in Canada, complying by traditional financial and banking laws, and also being able to still stick to the message of crypto, of being able to reach a lot of markets that really need it, like Venezuela and a lot of South America. So I'm very interested to talk a little bit about that. But also, as you mentioned, proof of reserves is a very fascinating concept as well. I think the issue that a lot of people have when it comes to a lot of crypto startups, especially ones where it involves involves handing over your crypto for a period of time, is being able to verify that it's there and that it's going to be secure. And I know you guys use BitGo security, which is still to this day the highest ranked in the sense of security and most widely used for custodianship. So having that proof of reserves, how do people actually go about, verifying in this case? Is it done through an audit, or is it, is there a tool that people can use to verify that the funds are actually under your holding?
Yeah. So like I mentioned, one thing that we're very, very proud of is we are actually, to our knowledge, the only company, like I said, to have worked with a third-party custodian and offered client-facing reserves. So whenever a client of Ledin takes out a Ledin loan, a unique vault address is created for that loan. The client then sends their Bitcoin collateral to that vault address, and they can see on chain from a block explorer or their own personal node that the funds will not move from that vault address until they decide to pay back. The place they go essentially after the loan has been paid back is back to your personal wallet.
I like
that. That to us, that is the only way that the client in real time, without taking any further steps, can check that we in fact have the funds. The audit processes, there's other structures that some other companies have taken, but it requires work from this part of the user, and it requires hashing some instructions, and it's not always straightforward, and it's not in real time. It can be done periodically, and you can go back and check that you were included in those counts, but it's not done effectively in real time. So with us, you get on-chain, real-time proof of reserves, client-facing with no extra work needed.
I love that, Mauricio, because it's a very simple solution in this case, but I get it because whether again if you're using a block explorer or if I'm running a full node myself, if I'm really that kind of paranoid and want to make sure my funds are there, you have every way to audit it on your own in this case. If the funds move, and you can see it real time. Right. So I think that that's really exciting stuff. As simple as it is, I think that's a very practical solution, and again, much better than just relying on simply some big auditing institution or one of the big accounting firms to step in this case. I think that's awesome. No, we were kind of talking a little bit as well about this kind of topic of South America. I know you had mentioned stuff, and I want to get into your story about it as well because I think it's a fascinating one. But you guys have a very strong focus on South American markets, and as you mentioned, there's a lot of people who wanted to get dollars at the time to be able to get some kind of loan or cash at the time, but also at the same time wanted to hold their crypto. So you guys are providing that opportunity, and you've had some pretty good growth too.
Yeah, I mean, I'm from Venezuela originally, so that's helped because I feel like we can speak to a lot of the needs that the community has and directly in their language. So as I mentioned, a lot of times we're building services that are not necessarily earth-shattering new. A lot of people, like a savings account is not necessarily a revolutionary concept, and neither is per se a loan. But when you look at places like Venezuela, for example, in Colombia, it's not necessarily that you're just bringing in one more savings account or one more loan product. It's the fact that these groups of people had never had access to these types of services on a hard currency. So while they might have a bank account for their bolívares, it's never worked on bolívares. While they might be able to get loans in bolívares, no bank has ever approved them. While they might have Visa and MasterCard might have a presence in the country, they'll go into for a credit card application, they won't get it. So a lot of the time, so to give you some context, in Venezuela, which is one of our biggest markets outside of Canada, our average deposit is about $125. Wow. So these are real people that are looking for real solutions. And that is what our product facilitates there. So another piece that we do very differently with this market in mind. So as we were building this, we knew that people that needed these types of services weren't always going to have 3 Bitcoins, 4 Bitcoins. They weren't always going to be the people that, had, tremendous wealth and disposable income. A lot of the times we're going to be people that were literally looking for a safe place to park $500 until they could accumulate enough to get a $500 loan. And so if you look at the lending platforms that are around today, I want to say none of them have, even though a lot of them say that they want to go into LATAM and do this and do that, I'm pretty sure we are the only platform today that has the whole service offering and experience all the way from customer service to the legal agreements in Spanish. And that makes a huge difference. So that we essentially, when we were building this product, we realized we took a hard look at who is going to need this product, who's going to use it, and how are you going to build it. So we are, again, going back to the things we do differently, we are the lowest headline number we're the company essentially that's able to process the smallest loan amounts in the industry. So anyone that people can come to us for a loan as low as $500 Canadian or $500 American, which is not the case in most lending platforms.
That's incredible, man. And you're 100% right, Mauricio. The issue that I found within even the DeFi or kind of centralized finance space is that there are a lot of great lending pools and they're processing great volume, especially for any application of cryptocurrencies. I think they've really you guys have all taken the cake this year back in 2019 as one of the most interesting use cases. But as you mentioned, as I've looked across the landscape, I don't see any serious plays trying to get real capital in the hands of people who need it, especially in areas like South America and Southeast Asia. And along with that as well, getting down to those deposit levels that actually make sense for them, that actually would allow them to get dollar exposure, and along with that, be able, in this case, if they have Bitcoin, to be able to earn interest or be able to get access to basic banking services, like you said. Again, to be able to, it's just so revolutionary to be able to have Bitcoin in this case and be able to get exposure to the world reserve currency, which is dollars, and then be able to go spend it or use it to build more value and wealth. That's exactly what people in Venezuela or Brazil or Argentina or any of the major countries that South America they need right now. And to just finally see a company actually focusing on that, I gotta say it's really refreshing, man. And I think it speaks to your story too. Like, I mean, I definitely want to give you some time to kind of talk about that because I think it speaks to the inspiration behind what you've built, and I think it's a beautiful story.
No, I appreciate it, man. So, I mean, a lot of people have heard, here and there what kind of went down in Venezuela, and I was, I want to say lucky enough because I feel very lucky today. So I was lucky enough to kind of live through the boom and I don't want to say bust because it hasn't really busted, but the boom in the sort of people first learning about Bitcoin, then started to interact with it, and then thirdly, people basically learning about mining and how that process evolved. So in essence, I'll tell you like short summary, kind of how I stumbled upon Bitcoin, and it was 2014 at the time. I was back and forth between Canada and Venezuela, and my youngest brother was looking to start up a new venture. He had just graduated university, so my dad is a very entrepreneurial guy. So he would always have us pitch, and when we pitched an idea that he thought had legs behind it, then he could write us a little angel check, and off we went with our ventures. So I had done it, and my middle brother had done it, and now it was time for my youngest brother. But the change for him was that it was in the middle of just a complete economic crisis in Venezuela. Like Chavez had just passed away, and Maduro had just taken over communism, had basically stolen the new election. So we were doomed to 6 more years of Chavismo. And so it was really not the environment you want to invest in. So when all of these ideas, he was pitching all these ideas and almost desperately trying to very creatively find a way. And I was sent some of the info because I was in finance school, and I had a finance background, so I was like doing the projections, checking, and all this stuff. So finally, after we shut down a lot of these projects because we didn't really want to venture him on a losing bet, he presents this idea of mining Bitcoin, and he sends us the computers. It was the first time I'd ever read about Bitcoin, but if we had shut down so much before and there was just not a lot of opportunity available, so we said, why don't you go get these computers and try it? And this was early 2014. So on Christmas, I want to say I think it was Christmas of 2015, I went back home, and he already had doubled his mining operation. And
that's incredible. I mean, mining in Venezuela with the cost being so low, I mean, you're getting that early as well. That combination is awesome.
So he got he almost, there was a bit of luck involved, of course, but timing in a way. But when I went there and I saw double his machines, I was like, immediately I thought something was up. So I went up to my dad. I'm like, what's going on? He's like, no, he paid me back. I went up to my brother. He showed me how he was able to trade out of these Bitcoins into Bolivares through an exchange that in Venezuela at the time was called Sur Bitcoin. And at that point, I was like, whoa, what did I miss in this whole Bitcoin thing? And I had to come back to Canada, so I started building rigs here and like helping my friends back home build their rigs. And I would come. I was coming maybe 3 or 4 times a year to Venezuela, helping people set up mines and learning more myself. And through this process, I saw so many people literally switch their entire business activities. They were shutting down their businesses that were losing money, and they were basically replacing their equipment with mining equipment, and they were all happy and making money. A lot of people were essentially getting these Bitcoins and leaving the country to get reestablished in Colombia and Argentina. So it was really working as designed. And as I saw more and more people benefit from this and essentially, earn their Bitcoins and starting choosing to hold Bitcoins over dollars or over other things, because never in their life had a Venezuelan or a Mexican person or a Colombian been able to own anything that would appreciate in US dollar terms. Back, south of Texas, owning dollars is the top of the mountain. Like only the highest and most sophisticated people will ever come close to thinking about US equities or US real estate. Like that would be the 1% of the 1%. But for the rest of us, or the rest of the people, holding dollars is really what you did. But now you were holding this thing that was digital and behaved like a stock, and all of a sudden today I had $1,000, tomorrow I had $1,100, and they were just like, it was a breakthrough because they were seeing equity-like returns in dollar terms. So people essentially became enamored with this idea of Bitcoin.
Yeah.
And
I was going to say, Marisa, that's so true. A lot of people, I think in the US, we're kind of, and also maybe Canada as well, a lot of developed countries are so blind if you're using one of the major world reserve currencies. They don't understand how difficult it is when you're trying to save up wealth, and then in an instant, due to either mismanagement of monetary policy or government policy, you can lose an entire generation of wealth or lose half of your wealth by simply devaluating your currency against the dollar. And that's not even factoring the fact that in the United States, the dollar is losing purchasing power. And that's seen as the Holy Grail, as you mentioned, for a lot of people.
Yeah, well, like I said, it's fascinating because people have, so this idea of, the concept of inflation itself is difficult for a lot of people to grasp, right? Because when you're in a place like Venezuela, the inflation that you're always, I want to say, sensitive to is Bolivar to dollar, right? Like that's the inflation peg that you're always paying attention to, but you're not always really paying attention at the purchasing power of that dollar. So because you're always looking at this, you're not really seeing how far away this is going. So you're always worried about how far away this is, but you're not really looking at the erosion of the purchasing power of the dollar year over year. Which again is fascinating, because if you look at it from a North American standpoint, like I want to say, like even in Canada and North America, these concepts are hard to grasp. For example, buying a home. You buy a home, right, in a nice part of your city, right? You buy it at $1 million today. 5 years go by, that home's worth $1.5 million. Let's just say, right? If you sell that home at $1.5 million, can you get a bigger and better home next to it? No. Most homes that are like it are probably already 1.5 million. So you're not upgrading. You're not actually profiting. You're maintaining the value of the wealth that you put in that home. Now, how you extract value from that is you take a massive short position in the financing currency that basically you take a short position on something that is depreciating, which is the dollar, your mortgage. Your mortgage and most mortgages are essentially a massive short position on the US dollar, anchored by a home that is, keeping in value relative to the US dollar.
It's the underlying collateral in that case, kind of for the mortgage in that case. Yeah, so I think that's a very interesting way to see why property markets tend to always do well. It's at least a hedge, similar to how people would look at gold or other kind of safe haven assets, that even during good times and bad times, a property is something that people are going to use. It's usually a very continuous and cyclical market where there's always people entering in, and you can easily exit out in some ways. And it gives you the ability to use it as collateral to bet against the dollar. That's a fascinating way to look at that, Marcia.
Well, and then the flip side to that, so I tell this story anecdotally because it does feed into this reasoning why we built Ledin, which is that I made more money, or I did better financially, shorting the Bolivar than long Bitcoin. Mm-hmm. And so people ask, how do you short a currency, right? Like how do you go about shorting a Bolivar? And I'll explain it because it relates to how you can use Ledin. So in Venezuela, if you were a person that had a decent credit score, you could go to the bank, take an unsecured loan in Bolivares, right? Take that money, take those Bolivares, buy dollar on spot immediately with those Bolivares that you got. So you're borrowing at a rate of, in Venezuela at the time, it was around 30% annualized, right? In the Bolivares. But the Bolivar was inflating at a rate of 3,000% annually. So all you had to do is take bolívares, take a bolívar loan, buy dollars with it, wait for inflation to do its thing. 3 months would go by and you would convert a fraction of your dollars back to bolívares, pay off the entire loan, and borrow the entire thing again. Mm-hmm. And so what you're doing in essence with Bitcoin and dollars at Ledin is you're in a way, you're parking an asset that is like your home. It's like a mortgage for your Bitcoin, essentially. You're taking out dollars today because you feel like your dollars are going to be worth less tomorrow. And with those, it'll be easier for you to repay the debt and get your Bitcoin back. That's a similar concept.
I gotta say, man, I think you put it in a really clear way. I haven't seen many people explain kind of crypto-backed loans in this case as good as you have right here. So I appreciate you taking the time just to even explain the concept, because it's new to so many people. But Mauricio, I was gonna say, for those who are interested, this has been a fascinating conversation. Where should people go to if they want to learn more about what you guys are doing, if they want to maybe possibly lend their crypto or borrow crypto themselves?
For sure. So our site is the best place. It's ledn.io, ledn.io. And you can always chat with us, email us. Everything's on the site. We're very easy to reach. You can also reach us on Twitter. Our handles are at HODL with Ledin. And my personal handle as well is at Cryptonomista. So that's cryptonomist with an A at the end. And you can find me. I'm usually talking about proof of reserves or lending.
Awesome, man. Well, I'll go ahead and I'll leave a link in the description for you guys to check out Ledin. And Mauricio, thank you so much, man, for making the time, man. This has been a really interesting conversation. I'm excited to see more expansion into South America, and then also just getting more people using crypto in the lending market. I think it's a fascinating ability for crypto to be utilized as money. It's not just going to be used for sending, receiving payments. It's got to be in the credit markets as well. So, Mauricio, thank you very much. I appreciate you making the time, man, and we'll have to talk again soon.
Sounds good, Nick. Thanks for having me.